Super happy to have Thomas Restout, Global CEO of B2C2, with us today here in St Moritz. B2C2, for those who don't know, is one of the leading crypto market making firms and OTC trading firms in the space. Thomas, welcome to RULEMATCH Spot On.
Thank you. Thank you for having me. Great environment. It's not every day that you get to interview in the
Such a
most beautiful place, one of the most beautiful places in the world. So
absolutely, yeah, super.
thank you.
I mean, the last year, 2024, was really marked by two big things in the market, right? Bitcoin spot ETF approvals in the States just about 1 year ago, plus Bitcoin crossing the line of 100K. Major things. But just from your perspective, from a B2C2 perspective, how much of an effect did those things have on liquidity in the market? Was that really a big mover, changer of liquidity?
So the ETF in March last year was a very big mover. If you actually look at it in number, ETFs for Bitcoin trade about 5 billion a day. So make it 150 billion a month. The total spot market is about 3 trillion a month on big volume month. So you really have a meaningful share of liquidity that has been created within the ETF market. And the second layer of the ETF market is it opened up the market. It's not the same people buying Bitcoin Cash or buying Bitcoin derivatives on crypto exchange and people buying ETF. We're talking hedge funds, we're talking TradFi, people entering, we're talking a very different type of clients. If you look at the list of holdings, because above a certain size you have to make disclosure, you can find the list of names of people who are holding those ETF and realize that none of them were participants in the ecosystem before. So not only it improved the liquidity because of a new market and it's measured by volume, but the biggest impact was opening the space to new participants and sizable participants. I think to your second point on 100K, I think price levels are important for their psychological price level, but obviously most important piece is the change in outlook in the industry, which drove the price action. Obviously, I don't think this had any immediate impact on liquidity above and beyond the sheer fact that people who were already participating in the ecosystem became more active as the result of their change in outlook on the ecosystem. But yeah, as you say, two very big milestones for the ecosystem.
Definitely. And of course, when a bull market hits and everybody's talking price, many other things kind of go by the wayside. We had a guest on the podcast recently, actually from Sygnum Bank, and he was making the point, when a bull market hits, people forget about things like counterparty risk or all of those things that came back to bite the industry when FTX blew up just about 2 years ago. How do you see that? Will it be different this time? Are we really building for a sustainable
I think the first thing is
market?
you don't know what you don't know.
Yeah.
So we'll start here. I can only talk about what I see, what we do, but we don't know what we don't know. But from our side, we had let's take a firm like B2C2, which takes on a meaningful portion of risk and credit risk in particular. We believe we were already fairly robust in 2021, the first bull run, but now we had another 3 years on top to scale our systems, make them more sophisticated, faster to respond, more accurate in terms of measuring and maintaining our risks. So yeah, we're far more confident that we can sustain not only the business we're seeing today, but the growth that's coming. In terms of people forgetting counterparty risk, I'll say two things. One, there's still a fairly big focus on mitigants of credit risk. So you were talking about custodians that you've had on this chair not so long ago, and they're still developing fairly innovative technology setups so that we can disintermediate credit and therefore reduce the exposure, the credit counterparty exposure. You had prime brokers coming in, so you have a lot of new things that help us reduce the counterparty risk. And of course, the exchange, which were at the center of the issues not so long ago, they themselves have
Realized.
realized and transformed. They had to adapt. Regulation hit them fairly hard for some of them. We don't yet have the prudential side of the regulation for them, but they know they are under the radar. They've spent a lot of money transforming their businesses. So yes, I think we are in a very different space. I'll do an analogy because there was an interesting article in the FT because the assets that were put to work for the purpose of trading at the tier one investment bank, so we're talking TradFi, were just overtaking the '08 levels when we had the last crisis, to do parallels between industry. And the article is specifically about everything that has been done during those almost a 10-year period, well, actually 15-year period, to make the ecosystem, TradFi ecosystem, far more resilient, far more robust, and with a lot less of system risk. And I would love to hope that the crypto ecosystem has done the same journey, or partly has done the same journey, and we are in a similar position.
Step by step, obviously. Just turning back to liquidity, are there some other things, do you think, more structurally, more market focused, not so much macro or geopolitics, that could affect, grow, change liquidity in the space? I'm thinking in particular perhaps of HFT shops that come in to do more active trading. What kind of things do you have on the radar?
I think I'll try to split it in a few spaces. One, the type of players that are coming in, they're not really the HFTs. They are people with balance sheet to allocate. When you read that tier one hedge funds are the biggest holders of ETF, that means they are buying to hold. They are committing balance sheet to the ecosystem. That materially compresses the volatility in the market, because you will have systematic buyer if the fair value, what they perceive to be fair value, goes under a level. So you will have the risk on the downside gets lower. So I think it's more the size of the balance sheet of the player that matters rather than the HFT. The HFTs, they've been there for quite some time, trading on the exchange, but their job, they operate as connectors between different pools of liquidity rather than holding the assets on their balance sheet. So I think the new type of players is already having an effect. If you look at numbers, if you do comparison with '01, you will find roughly the same level of spot volume. Actually, spot volume this time are a bit lower than what they were in 21. You will see derivative volume, futures, slightly up where they were in 2021. Yes, because a lot of people starting distributing and trading at derivatives. And then the biggest number is probably options, where the volumes have grown about 3 to 4x what they were in 2021. So you really have all the levels of the product space that have been increasing over the couple of years, creating an ecosystem of buyers and sellers, which is far more balanced. And you can see it in numbers. If in 2021 you would see the basis, so the DAR borrowing rate of crypto was above 200%. This time it was fairly contained. It went up to 25, maybe 30% when the market rallied, but vastly different from 200%. You look at implied volatility on options. It was at 150% in 2021. It didn't go above 65 this time, so half the value, and that's because you have an ecosystem that is far more balanced in terms of participants. So it has a very positive impact on liquidity, which hopefully gives the confidence that was necessary for another wave of adoption of the asset class.
Very interesting. Is there anything on your radar for 2025 that maybe people aren't talking about just yet, but you think could be a very interesting development? Besides a strategic Bitcoin reserve in the U.S.?
Yeah, of course, that would be amazing
It would be
movers,
big.
and it's not just the U.S. by the way. It's all there's a lot of sovereign funds, central banks that are talking about about Bitcoin, obviously in the theme of dollarization or de-dollarization.
Yeah.
How you want to look at it. So this will be big topics. We obviously have regulation coming everywhere with the opportunities and risks that they contain. We went through the first wave, the wave that we believe, or we can see a path for regulation in all major economies. So that's extremely positive. But regulation, well, hasn't been written everywhere, so
Yeah.
the content will be the next topic. The timeline, how fast it will be implemented. So I think as much as we've had extremely very good optimistic outlook, there's still a lot of pitfalls ahead of us. And what I think are the big themes for, at least on the theme of liquidity, will be connecting pools. We've done I like these type of numbers. You look at exchange. You take the top 5 exchange, have about 50 to 60% of the liquidity, with one dominating the others, and then you have a tail of 35 exchange that constitutes about 35% of the liquidity. You don't really have asset classes where you see that level of distribution. So
Fragmentation.
either fragmentation reduces, so this consolidates, or we become better at linking those pools. But one of the value proposition of the crypto ecosystem is the ability, or the blockchain in more general term, is the ability to connect all those pools. Because we use stable coins to move collateral or margin much faster than you would do in traditional finance. So I think there will be a mix of maybe some form of consolidation, but also continued innovation on how to link all the different pools that exist in the ecosystem, and of which probably the next step will be to bring more decentralized liquidity into mainstream pools. I'll leave you with that number. In 2021, it was less than 10%, the liquidity of DeFi. This times around, I'm talking spot here to have one measurement. Last time I checked, it was about 18%.
Okay.
So yeah, slowly grinding into or becoming a significant liquidity pool.
Very, very interesting. Thomas, thanks for joining the podcast here in St Moritz. Wish you the rest of the week a very good time, and we'll catch up again soon.
Thank you very much, Ian.
Yeah.
Have a good day.